of the day's market movements. James Gerrish from Shaw and Partners and author of Market Matters joins us now live in Sydney. James, great to have you on the program this morning. What was your take on the session overnight? Those equity markets in the US somewhat consolidating but finishing down in the red. Those at yields also lower. So what's your take on how we might open this morning?
Yeah, good morning to you guys. It's going to be a lower open on the Aussie market this morning. SPI's down about 0.5%. The material space, the resources are going to weigh on that. BHP is going to open down about $1, so about 2.3% relative to yesterday's close. So, you rightly pointed out the sort of soggy trading action on the US market last night. The market did close, or stock market did close pretty much on its lows, only marginally lower. A lot of commentary coming out of the US just around inflationary expectations, but inflation going higher, that's stoking fears and a sell-off in equities. But if you look at the bond market, yields were lower as well, so that sort of goes against that fear around the inflationary expectation. So a softer session overseas, that'll flow into a softer open today. I guess the other thing that was worth highlighting was the gold price, which traded through 1900 an ounce overnight, so that's obviously going to be supportive of the gold miners on our market today, guys.
Yeah, so we're obviously going to take a good look at that space. More broadly, how you're seeing commodities at the moment. Obviously, the iron ore price has come off significantly. Does that make you look twice at some of those miners at the moment?
Yeah, it's been whacked. So, I mean, commodities had a really hot run. There's no doubt about that. They're the obvious reflationary trade. So, you think about, I was just making mention of bond yields ticking lower overnight. Sort of that goes against that reflationary trade. So the reflationary trade is being long commodities. I think they'll probably be soggy for a little while. They've obviously had a really strong run up in price. Some consolidation around these current levels shouldn't be unexpected, but I think this is sort of the higher low in the trend, if you like. So the big guys, BHP, Rio, Fortescue, etc. This weakness is time to accumulate. I probably think we've got more downside just in the very short term before we find a low, given what bond markets are doing and given what the US dollar, etc. is doing. But I think this is a dip to buy. And the iron ore price, you made mention of that, above $200 a tonne. That's an extreme level. We're coming back to a level of sort of more normality. If you rewind the tape sort of 12 months ago, 150, 160 a tonne is, these are very, very elevated iron ore prices, and these miners are printing a lot of cash based on that price. So I wouldn't turn bearish the sector just because we've got a short-term pullback there.
All right, let's dive deeper into those gold miners then. As you said, gold pushing through a key level overnight. Are there any standout companies here that you would look to buy?
Yeah, so we've got Newcrest, a large position in Newcrest in the portfolios. Like that simply because it's got a lot of significant gold reserves in the ground. It's obviously been hit over the last couple of years on the back of operational issues. That makes it cheap relative to a lot of the other gold miners. But if you go down the mid-cap space, Northern Star is probably going to have some headlines today. They're hosting an analyst trip, so they're taking them out to the super pit. So that's going to obviously generate some headlines and some interest in that name, so keep an eye out for that one today. But again, when gold prices are rallying, pretty much all gold stocks should be rallying. They're cheap. They've underperformed the rise in the gold price. So in my view, I'm bullish gold. We've got a large position where we run high conviction concentrated portfolios. Our largest position is in Newcrest, and we're enjoying the upside.
James, are you looking at any explorers at the moment? Certainly, obviously in the smaller caps there, or is it purely those gold miners who are pulling it out of the ground at the moment?
Yeah, I'm more in the larger cap space, so more looking at the producers that are taking advantage of this gold price. But if you want to go down the speculative end of town, Geo Pacific Resources, it's a PNG focused gold exploration company. PNG mining, gold, there's a heap of curly things associated with that, but it's cheap. GPR is the code there. It's one we like, it's one we've got to buy on and think it's got really strong upside, but it is a higher risk operation.
And James, I know you're watching IGL. They've issued guidance. Tell us a bit more about what you've seen this morning.
Yeah, the company name's IVE Group. IGL is the ticker for that. They're a large scale, integrated marketing business and printing business. So they do a lot of, catalogue printing and the like. It's a fairly complex area of the market these days. So, scale matters, having technology matters, and there's a lot of plant and equipment that goes into, generating having the facility to do these things on scale in cheap ways. So they've come out. They've had a really tough COVID period. There's no two ways about it. What they did manage to do is not raise capital through that difficult period, and they've come out. They had a really strong first half 21 result, and now they're leading into. They've had a updated guidance today, which pretty much smacks on in line with market consensus at the moment, which was for EBITDA of 98 to 100 million. So that's smack in line with expectations. So if you think about this company, it's trading sort of sub 10 times PE and yielding above 8%. So, and it's got growth in earnings as well. So it's a smaller cap, but it's interesting, and we've got it in some of our income-focused portfolios.
James, good one. Thanks for joining us from Shaw and Partners.
Thanks, guys.
Thanks, James.